Joining us now is Berkshire's chairman and CEO, Warren Buffett.
स्टॉक मार्केट रिलेटेड इंटरव्यू वीडियो पाने के लिए मेरे चैनल को सब्सक्राइब करें और बेल आइकन को दबा दें।
Warren, what's it mean to you to have gone through this weekend?
It's a lot of fun. Yeah. I mean, you see who you're working for, and they see you, and you interact with them, and they come in sort of a Mardi Gras spirit. I would say in the last 10 years, was now maybe 40. Well, from out of town, not 40,000, but a great many from around the world. I just never get a letter of complaint. I mean, I know that somebody misses planes or has a car rental that isn't available or a hotel room, but they just come in the spirit of enjoying it, and the people in Omaha welcome them that way. So people go around with smiles on their faces. I mean, we have 600 of our own people that come in from our various subsidiaries, and they really work for a couple of days, and I've never seen anything but smiles on their faces.
Well, unfortunately, we're not going to allow you to rest on your laurels this week because we have some major news that's breaking this morning. You see the markets already down by almost 500 points, the futures here for the Dow. What do you think about the potential for trade tariffs coming back on and what that might mean for the trade talks?
Well, I can't gauge how both sides will play the game, and they're always, some people negotiate different ways, if we actually have a trade war, it will be bad for the whole world, and could be very bad depending on the extent of the war. But there's times in negotiations when you talk tough. The one thing you can't do, though, is you can't shake your fist first and then shake your finger later on. I mean, that is not a technique that works well. So when you do push ahead, you don't know exactly what the outcome's going to be.
Well, you can't shake your fist first and then shake which finger later? What are you talking about?
Well, you're more advanced on this than I am, actually. But that's what you're worried about, is you get the other finger back, and you have to mean it after a while. Otherwise, it doesn't mean anything, obviously, when you do that. And you're gauging a response from someone else that also has their own calculus and has their own internal political considerations and so on. So it's a dangerous game. Doesn't mean it's a game that shouldn't be engaged in, but it's a dangerous game.
You negotiate a lot of deals too. Would this be your tactic?
Well, it isn't mine at all. But you know, we can talk about the Occidental deal later on, the illustrator. But I've had a consistent way of negotiating, and that has its advantages. Probably has its disadvantages too. But I just say what I'll do, and I don't do anything else. So people really know that's what I mean, and they can decide whether what I've said is acceptable or not. But they know that I don't go through a game. Now, there's lots of people in acquisitions that really like to play games, and they're used to it in their own business, and it's their way of doing it, and that's fine, but it doesn't work with me. And I don't want to, I can't afford to spend the time on it. I mean, you know, you don't know whether you're ever going to get there, and you spend weeks and months, and it's just, it would be a huge time waster if we did it.
You know, I don't know that this is bluster coming from President Trump, though. He's already put the tariffs on. And I don't know that I would take this lightly and think that we're not going to be seeing 25% tariffs on Friday.
You can't. But if you're playing the game, you have to sound that way. I mean, if with some people in negotiations, the best technique is to act half crazy. I mean, you know, with your kids, you can see how it works. You know, I mean, you're negotiating things with your children all the time. You know, I'm going to count to 3, and if you don't do this and that, you know, but they know you're not going to shoot them in the end. So they've really got the edge, and that goes on all the time. And it's interesting, kind of, with the reputation of the industry. We bought a very large auto dealership operation a few years ago, and we did make more or less our kind of deal, winning the price, and probably 20 times since then, people come out and they say we want to do something, and they just, we've never found one that we could do the same way. I mean, it's just part of their lives to negotiate, and it's part of my life not to negotiate. So
you mean to come in with a high offer and
sure.
expect that you're going to negotiate?
Yeah, anything
them
you say, and I understand that. I mean, that's the way a lot of things take place. But probably a majority of transactions, but it's nice to have a reputation for not doing it because it makes it a lot easier. You save a lot of time.
Well, let's talk about what it would mean if tariffs on Chinese goods rose to 25% from 10% on that $200 billion worth of goods at the end of the week. How significant is that? What would it mean for Berkshire's businesses?
Well, it would mean a lot to the world. It isn't just the countries involved because, they take the dollars they receive from us net and they buy goods in other places. I mean, their trade surplus is considerably less overall than their trade surplus with us. So everything intersects in the world, and it depends who gets retaliatory with us or with them, and it's easier to start it than it is to stop it, and the effects would be huge if conducted on a major scale over time. Just imagine, Becky, that our Constitution was set up differently, and that states could erect tariffs, and Michigan would put a tariff in on cars, or we would have one on corn, and then the degree to which trade would contract in this country, the mislocated plants, the migration of workers. I mean, it would be, well, it sounds ridiculous to talk about it because it is ridiculous. But you've got countries where you would have similar effects if you get country after country after country, because you can't just have it between two countries. It will spread. Now, the very fact that it's sort of a nuclear threat is what brings people to the table. So I mean, that's the way that many play the game. But you don't want to have too many nuclear threats out there, because someday somebody may feel they have to fulfill one.
Right. Obviously, that's why the global markets are under pressure.
Sure.
It's not just Chinese markets that are down. You saw the Korea Kospi was down by about 3%. Markets down just about everywhere at this point.
It affects everything.
So that's you're saying the market's reaction is the right one. It's not an overreaction.
It's rational, and then we'll see what happens next. But obviously, if you went to bed a week ago and you thought there was a 1% chance of a trade war, and then subsequent events makes you think there's a 10% chance, markets reflect that very quickly. What
would you put in terms of, I mean, you're an actuarial mind in terms of these things. What kind of odds would you put on it?
When you talk about two leaders of the two major economic powers in the world, that's not the sort of thing I can lay odds on. I mean, you were talking about two personalities who are very much used to getting their way in politics, and you're talking about how they will be perceived in their own country in terms of their behavior, and it gets very complicated. There's no way I know how to predict that.
Although you've written insurance contracts on weirder things than this,
yeah.
What would it take for you to ensure that there was a deal done at the end of this?
It would take a big premium. Yeah, this would not be the kind of thing I would look to insure, frankly.
Because it's so unknowable?
Yeah, and you'd have a hard time finding the risk precisely, because if they lasted for a month, and then so you get into the duration of how long it was, you'd have a lot of trouble writing the contract. But it is the sort of thing, not precisely identical, but it's that we do take on unusual risks. But this is a big one.
What will it mean for Berkshire businesses specifically? And I just think on Friday we spoke with Jim Weber, who's the head of Brooks Running. They've already relocated and moved a lot of their operations to Vietnam because of this concern. They've been in the process of doing that since these trade talks first kind of appeared.
Well, we've seen it in our rail carload, intermodal, the stuff that arrives on the West Coast. I mean, everybody stocks up ahead of time, and it distorts things just thinking about it. You can imagine the distortion if you get into it. And you really can't predict the speed or the degree of effect because it spreads. You can't do something between the U.S. and China in a big way without it affecting all the major markets as they go around. And you're starting a game that you don't know the ending of, but you know it isn't a good game.
You say
but like you say, it may be necessary to play another game to avoid that sort of thing. I mean, that's what mutually assured destruction was. I mean, you felt as long as you had mutually assured destruction, nobody would actually launch a missile. And this is can be a similar type game, a little bit of chicken in it.
You say that intermodal rail loadings were affected by it, meaning that you saw an increase in rail car loadings because months ago because people were trying to stock up.
People loaded up on inventory that they thought might. I mean, if you thought there was going to be a 25%, I mean, if I thought there was going to be a 25% tax on Coca-Cola next week, I would have my house filled with Coca-Cola. It would look very good. Sales would look terrific, and guys that transported my house would be doing great and everything, and boom, it'd all end.
Well, that's a big concern. I mean, if we've been looking at this great economy and thinking things are wonderful, but it was really just pulling things forward, and then you get into a situation where it stops down, does that concern you just about
economic growth? Well, it pulls things
growth?
Forward, and I think actually in the GDP figures there was a big inventory adjustment, no, if you think the flow of something is going to either stop or get more expensive, and you need it, you're going to load up ahead of time.
Will this change your behavior in any way when it comes to purchasing securities or making deals?
No, we will buy the same stocks today we were buying last week. It's just I won't tell you their names.
But would you buy more if you get them down 500 points?
The cheaper they get, the more I buy.
But it doesn't mean that you don't think the markets could go down further.
No, I'm not buying
here.
them because I think they're going to go up the next day or the next week.
Yeah. So it's something you're watching very closely?
Yeah. Yeah, but we watch the prices of things we do more than current events. Mm-hmm. Because in the end, we aren't buying them because what's going to happen next month or next quarter. You know, we're really buying them because we think they'll be good businesses 10 years from now. If somebody came to us with a good business today, we'd buy it. And we'd buy it regardless of what's going on in the tariff situation. We might have, won't be the case, but we're more likely perhaps to get something when other people are fearful. And you see that in a big way instantly in a market, in the market for businesses. But it's still there with people's minds.
Welcome back, everybody. We are here and news is breaking. There's just an SEC filing that came out from Kraft Heinz. That's obviously a big Berkshire Hathaway holding. Kraft Heinz says that it will restate earnings for 2016 and 2017 due to misstatements in the original filings. It does not, however, believe that the misstatements are what they call quantitatively material to any individual reporting period. It says that the impact on adjusted earnings is expected to be less than 2% for each year. Kraft Heinz says that it has now completed an investigation that shows several employees in its procurement operation engaged in misconduct, but none of those were members of senior management. Our guest today, again, is Warren Buffett. He's the chairman of Berkshire Hathaway, which owns a major portion of Kraft Heinz. And Warren, what do you think of this? This news just hitting while we're sitting here.
Well, that's more or less what I've heard. I'm not on the board anymore, but Greg Abel and Tracy Britt-Kuhl are on, and so I've heard from them. This is an update that I heard last night and they can't issue the first quarter reports until the 10K is filed, and they can't file the 10K till Price Waterhouse signs off on it, and that apparently is going to require a restatement of a few years, and we could not report any earnings from Kraft Heinz in the first quarter, because if we get a dividend from Bank of America, that dividend goes into earnings. But because we have over 20% of Kraft Heinz, we don't report the dividends, we report the earnings. So we received a dividend of about $130 million in the first quarter, but that we don't report that. And we expected to get the earnings before we issued our own report, but when the time came to issue our report and we didn't have anything, we put a zero in there and explained it in our release last Saturday. And this is just a further indication of the facts as they stand now. At some point, Price Waterhouse will need to be happy with the figures they're reporting, and that evidently involves a restatement. And at that time, my guess is the quarterly figures become quite current, and that we keep picking up our share of the earnings.
I mean, this has been a long standoff period between PwC and the company. If they've missed all of the deadline to get the numbers to you at that point, what happened?
Yeah, we didn't expect it. And, I thought that we would have the earnings on time. And Kraft announced their earnings for last year, but they had not been signed off on by their auditors. So while they released them publicly, they couldn't file the 10K with the SEC subsequently. That's not unusual for companies to announce the earnings before they've actually got the sign off. But in any event, it's just, we thought we were going to get them this week or next week, whatever it might be. And then last Saturday came, and that's our time for releasing quarterly earnings. We did not have them, so we stuck nothing in there, and then had a footnote, and we put in our press release as well that we just didn't have the figures.
If they're restating their earnings, does that mean Berkshire Hathaway will also have to restate its earnings?
No, it would be so immaterial by the time you take just our share, and we're a much larger company. So I don't know exactly what we do when we get. If it gets into the second quarter, I don't know whether we pick up 2 quarters in 1 quarter or exactly how that works.
They said that they've wrapped up this investigation. Are you satisfied with what you've heard from that part of the investigation, or do you know the details?
I don't know about that. I do know that because I've been kept abreast of some of the things. I don't listen in on directors' calls or anything like that, but Greg tells me what's the high points of what, or the low points of what's happened. And we have a terrific head of the audit committee, Jack Pope. He's an independent director. Mm-hmm. He knows this sort of thing, and he's put in the hours on it. And so I feel very good about the fact that Jack is he's really in charge of things from the standpoint of the directors.
Does the company have your confidence?
The company has my confidence.
You had talked about it over the weekend, where you said that what you paid for Kraft was too much in hindsight.
Exactly.
Not what you paid for Heinz.
That's correct. If we just bought Heinz, it'd be a better investment. And we don't just over 50% of it, of a business that we're doing fine in relation to what we paid for it.
In a situation where you've determined that you've now paid too much, what do you do?
I paid too much for stocks. I paid too much for a lot of things. Time usually works it out, but it means that capital could have been better deployed in other areas. You can always pay too much for a business, and I've done it with stocks many times. I've done it with businesses. We've got at Berkshire, we have at least a half a dozen businesses, and I can't even use a we there. I got to say I paid too much. So, and if we make the next 10 deals we make, there will be a couple where it'll turn out that I paid too much.